Hello everyone, how's it going? In this video, we're going to be talking about Mullen, trading under the ticker symbol MULN. If you're looking to buy Mullen stock, please keep watching this video because we're going to take a deep look at the company's recent news, the market reaction, as well as the technicals. As the market remains volatile at the moment, we should always be mindful of which equities to pick, as well as their individual timing and exposure. Before this video begins, if you would like to see more stock analysis videos like this one, please remember to like, comment, and subscribe to my channel. Over the past few trading sessions, it appears that the share price of Mullen was able to bounce back to around 46 cents, which certainly gave some moderate encouragement to retail traders before selling off to around 42 cents. The trading session is surprisingly calm compared to what I initially predicted, which can be explained by the calm before the storm and the possibility that the Mullen being delisted by the Nasdaq is completely priced in, and the market may not be too surprised by this outcome. After all, the sell-off over the past few weeks has been mostly caused by the anticipation that Mullen will not be able to hold to its listing on the Nasdaq and therefore has to move to the over-the-counter market. Does it mean that this is the end of the company? I mean, we can probably expect a lot of volatilities coming our way, but at this current stage, I still believe that Mullen will be able to have enough time to raise more capital in the short term, while the company has recently begun selling its vehicle to commercial clients, albeit in very small quantities. Frankly, I wonder if we can genuinely qualify what's going to happen over the next few days as the beginning of something new, since the bearish news have been priced in up to now, and that the future may be analyzed under different lights. We can even argue for a possible bottoming, since the upcoming wave of volatilities, once it's behind us, we could think that, or at least we can speculate, that Mullen will go into a different dynamic. So, with that being said, let's take a look at the technicals. The trading volume of Mullen is recently around 37 million shares compared to the average volume of 91 million shares. Over the previous 52 weeks period, the price fluctuated between 39 cents and $178. The market cap of Mullen is currently around $70 million versus the enterprise value of $94 million. As we compare the current price to the historical price fluctuations, the stock is around 9% higher than the 1-month low, 9% higher than the 3-month low, and 9% higher than the 52 weeks low. On the options market, which often gives us a hint about the market sentiment about where the stock price can go next, the implied volatility is around 283% compared to the historical volatility of 206%. The put-call volume ratio is around 0.42. It's normal for many stocks to have a higher put option volume than what they deserve, as many long positions are hedged with put options. The most recent volume of options traded is around 32,000 contracts a day versus the 30-day average of 37,000. In terms of open interest, the most recent volume of open interest has been 1 million contracts, compared to the 30-day average of 1.1 million contracts. The option contracts are tools allowing traders to hedge their risk, increase the exposure with limited downside, or a revenue stream. They are derivative contracts based on the underlying security. They give traders the possibility to buy or sell the security at a predetermined strike price and helps limiting the potential downside. The put options allows selling at a strike price, usually chosen for the anticipated downturn, and the call options allow buying at the strike price, usually chosen for the anticipated bullish run. In terms of the shareholder structure, institutional shareholders hold about 10% of the outstanding shares. The biggest shareholders include Fidelity, BlackRock, and Susquehanna. Usually, it's better to see some institutional participation present in the stock because it offers a layer of stability for those of us who want to invest long term. It means that the market is confident that the company can deliver value to investors in the long term. I personally consider the minimum threshold to be around 25 to 30% of institutional ownership before considering putting money into this company for the long term. So in other words, Palantir meets this minimum threshold in my eyes, except at the moment I am not holding any Palantir shares just yet. The current short interest is around 9% of the total float, and around 57% of the transactions out of the dark pools. Typically, if the short interest is above 15% of the total volume and a significant portion of the short volume coming out of the dark pools, it could mean that there are institutional positions taken to short Mullen, which would present a potential for a short squeeze. So in this case, there is a significant amount of contracts been put out, but it doesn't really mean that Mullen is necessarily relevant for any sort of short squeeze just yet. Generally speaking, in the world of finance, penny stocks like Mullen are a bit unusual and also intriguing at the same time. Those securities are known for being cheap and get a lot of attention from retail traders or regular people like you and I, but they also tend to have very big price swings. Their movements don't often make fundamental sense. At the moment, a bunch of things are affecting the stock market. One important thing is the interest rate. When central banks raise interest rates, it makes it more expensive to borrow money, and that can slow down the spending by regular people and how to invest. For penny stocks, it might mean that people start to expect less from them or to think less of them, and some might even decide to not take these kinds of big risks for the time being, which can explain why penny stocks, especially the really risky ones like Mullen, have been losing value recently. This situation can also lead to prices going up because of inflation. Some people might want to invest in riskier things like penny stocks to try to make more money than what they're losing because of the rising prices. But this might not always work out, and it doesn't have a big impact on where most of the money the market goes to. Big investors usually wait for prices to drop significantly before they start buying again. Also, there's the possibility of a recession, which makes it trickier to decide if it's a good idea right now to buy shares of a company that's supposed to sell EV cars. Well, no longer supposed to, of course, because Mullen actually sells EV cars, even though just a few of them. Unlike other fancy tech companies like Palantir or even what Rework tried to be, Mullen is seen as a company that makes things and sells them to people. They can't really afford to lose money for too long of a time. Plus, if the economy doesn't do well, fewer people might want to buy EV cars, like the ones Mullen makes, because they tend to be more expensive than the regular cars. Then there's the issue of global problems, like conflicts, trade issues, and other uncertainties. These can shake up the financial markets real good. When that happens, investors often look for safe havens to put their money into, like blue chips, commodities, and government bonds, and they tend to avoid companies like Mullen because of their risk profile. All these factors can make penny stocks like Mullen jump around a lot in price and make people uncertain about when or whether they should be buying them. When interest rates go up, investors might get more careful. High inflation can be a chance for some, but a danger for many. And when there's a talk of recession, investors might choose safer things to invest in. It's just logical and part of human nature. Being honest and open about how a company is doing is also really important, especially for penny stocks. And in this aspect, I would say that Mullen isn't really a reference, unfortunately. Smaller companies often don't have the same rules or the company culture to report everything as transparent as the bigger ones or the more established ones do. Investors usually don't want to mess with penny stocks, especially in the long term, because they're not really clear about what's going on, given the fact that they are already risky. Without clearer information, there's a higher chance of scams, trickery, and market manipulation. The company that gives clear and honest information can really make a big difference in how confident investors feel about trading penny stocks like Mullen, which unfortunately, in addition to all the other problems that it's facing, is not really good at. My recommendation for Mullen in the current phase is to stand on the sideline and to wait for the market to eventually come back to a new normal before deciding the next steps. Currently, the volatilities are likely going to be downward pointing, but it doesn't mean that it's always going to be the case. And sometimes it may not even happen for very long. If the delisting has been priced in for a long time, which I believe it might be. With that being said, I do believe that Mullen does have the future in one form or another, as long as it's considered as a trading position for its potential volatilities. I would recommend to commit between 0.5 to 1% of your portfolio's capital in Mullen eventually, and would also recommend to split the allocation in batches of 20% at a time in order to purchase more in retracements.